television interview is something that you should see. Here's Value Quest's Ravi Dharamshi in a conversation with none other than Kalpraj Dharamshi as he reminisces lessons from his close aide and big bull Rakesh Jhunjhunwala, his investment journey so far, as well as the themes that he finds interesting. All this and lots more. Take a look.
He is actually an original investor and an original thinker. Like, he figured out all the concepts of investing which we read about from Warren and Charlie and all these Peter Lynch's of the world, and in a very desi, earthy way. Like, for example, he would say कि invest करना है तो ये धंधा क्या पैसा फेंक के बनाया जा सकता है. So basically, can you throw money at a business and build it or disrupt a business? So, which he's basically talking about moats, but he figured out moats in his own way. Okay, one thing which I have heard only him say and nobody else is, क्या मैं ये stock को P देना चाहूँगा? What is PE? PE is actually giving someone more than what he's earning. And the third thing which he always keeps in his mind, never articulates, but will you lend money to this promoter? अगर तू उसको 5 करोड़ रुपया lend नहीं करेगा तो उसका 5 करोड़ का शेयर क्यों खरीद रहा है? So basically that test which he internally came up with was very clear. His investing style is very innovative or very original again. He had two portfolios. He had one portfolio in his mind, he had two portfolios. One was made of businesses which had nothing to do with the government, which had very simple businesses, which were low debt or no debt, which were cash up front, and if possible, negative working capital. So, banking, insurance, Nestle's of the world, so consumer brands, and D-Mart or Jubilant. So these were the businesses which were his core portfolio. There were others which he called Barsati Medak. So those were to be sold at the first hint of trouble in the market. He was a very fantastic judge of the market, or is a fantastic judge of the market. So whenever he saw overvaluation, euphoria, blah, 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 that part of the portfolio went out. This part of the portfolio, come what may, he will not sell. So all these things are original to him.
How did he manage to do that without reading a book? Because all investors swear by reading.
So, yeah, that is, he's got a genius level intellect. He may not speak, he may not articulate it much, but in any room, he's the sharpest individual. Okay, then he is the best listener I have met in my life. And he'll judge a person in the snap of a finger. He will know in his mind, say, for example, if he is to invest in automobiles or cement or software or ABC, he will know which person to call to get an update to the minute. There are people in markets who are very, very, very updated on so many things. And he would have them on speed dial. You know, in one phone call, he'll update himself on industry thoroughly. Or if he wanted knowledge about a promoter or a person, he would know whom to call to figure out things about that person. For a value investor, there will be sectors which are ignored. There will be sectors which are undervalued for whatever reason. Like over the last 5 years, this China Plus One gave us chemicals. Realty was ignored because it was a bad sector. Entire realty sector was 1% of the entire market cap of India. Then you had PSU banks. They were, pariahs, dogs. You don't ever invest in PSU banks. But they gave fabulous returns. So there will be stocks and sectors like that And there will be sectors where, which are hot, and those you avoid.
You used to be you would catch a theme and then you would pretty much buy the entire sector or many small companies and everything. Today, I think you have a slightly different approach to that. Even if you catch a theme, you probably won't buy across the board. What has changed and how have you evolved over there?
I wouldn't say it has changed that much. Say, for example, realty. We caught that just 2-3 years back. And I did a basket. But the basket was basically, see, Mumbai, Delhi, Bangalore are 50-60% of the realty market. Delhi, there was only one man standing, DLF. Bombay, you had 2-3 players whose balance sheets were good, who had land banks and who could execute. And Bangalore, similarly, 3 players. So it became easy, but it was still a basket approach. Now, the genesis of that earlier basket approach was a lack of in-depth research, stocks being available dirt cheap, and when CRAMS, for example, contract research and manufacturing. So this Arvind Joshi, my friend who started ValueQuest Research, he came up with this acronym. Even the management of the companies did not know that this is what could happen. So at that point in time, there was no way for me to know that, okay, this is the company which is going to succeed.
Well, key investment strategies coming in from market veterans. Now,